It's all good? Excellent. Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor. And in today's video we're talking about the Halifax House Price Index for November 2021, what it means for you, what it means for UK house prices, and how we're up another percent, which for me personally on my portfolio, a little over £3 million, £31,124 of capital appreciation in the last month alone. It's just staggering, isn't it? It's unbelievable. I can't believe how quickly this house prices are rising at the moment. And if you look at quarterly, 3.4% for the quarter. Absolutely insanely quick growth. So guys, we're going to think a bit about why that is. We're going to talk a little bit about inflation on this video. I know it's a bit of a boring subject, but we need to go there. We're going to talk about the average house price, what this all means, and what the future may have in store for us. Because ultimately, can this continue to rise at the pace that it is? These annual growth figures of 8.2% are well above average. We know what happens when markets get overheated, but at the same time, I think there are some mitigating factors in this instance, such as there is so much cheap money out there. So I'm going to give you my thoughts. As always, if you'd like to give this video a big like, it massively helps me out with the algorithm. And remember, we don't sell any courses or anything else like that on this channel, which means I have no incentive to hold any information back whatsoever. I'm just here to give you as much information as I possibly can so that you can make better financial decisions when it comes to your personal finances. So guys, let's get into the video. Let's start talking about the Halifax House Price Index for November 2021. Well, in the UK now, the average house price, it stands at £272,992, which is a record. So we're at record highs when it comes to house prices in the UK at the moment. Now, regionally speaking, Wales actually has outperformed everywhere else. It's up 14% year on year, and the lowest performing region is London. However, London only up 1.1% year on year at the moment, but there is a note that London has started to uptick in prices this month. This is up from last month, so we're expecting to see London start to move. Now, what does that mean? Generally, London is the place that really fires up house prices. There's about 10 million people who live there. It's a big proportion of the UK wealth, and house prices in London, if you think about it, the average I think is 550,000, something like that. It's certainly over 500,000. When those prices start moving, this average and everything else is going to move significantly. Most regions have seen growth above this 1%. It's that London has pulled it all back, and it's a big contributor to the UK housing market. Month on month, 1% up, as we said. Now that's a huge growth number, to be honest. If you did that every month, it'd be 12% in a year. The average is much, much lower. It's 4 to 7%, something like that. We always on this channel say 5 to 6 is about where we want to be. And if we look at my portfolio, we started tracking in July, saying that I had about a £3 million portfolio. In July, it went up by 0.4%, which was 12,000. August, 0.7. For some reason, I haven't written down September and October's. I just put the new figures. But whatever, now we're at 1%. We're now at £3,143,531, which means since July, if my portfolio has just mapped the average, which I'm hoping it's probably exceeded because I'm not London-centric at all. I've got Northamptonshire, Yorkshire, a bit in Oxfordshire, and I have got a London property, but it doesn't take up a big proportion of my portfolio. With all that considered, I should be up about £143,000 in the last 5 months. That's crazy. That's a really good growth, which means on average, 143,000 divided by 5, what's that, about 25,000, no, about 27,000, something like that per month. Really good growth figures. Unbelievable, to be honest, considering going back a year, if we went back to 2020, when the pandemic first hit, everybody was saying house prices are going to crash. I was sat there going, oh, but they already are starting to. Can I pick up some bargains? And I really did. Let's just talk about a couple of them really quickly, because I think these are really key purchases. I bought a house in Corby for 116,000. I spent about 40k on it, and that one got revalued at 200k. Now you have a look in Corby at 4-bedroom houses, it's 215, 220, something like that. I bought another property in Didcot, 275. I spent approximately 40k on it. It's now worth about 375. I mean, a lot of these gains are the market. You've got to bear that in mind. A lot of these big gains are the market, not the value I added. I added value, but nowhere near that. That is the market. And I really want to highlight the power of the market over time. I could have bought this already done up for 325 and I'd still made 50k. It just so happens I made an extra 10k because I did the work, and I made it fit for purpose because that became a 5-bedroom HMO, which is currently rented out for £3,000 a month for about £1,500 a month worth of profit. So guys, those are just a couple of the purchases that I made. I also bought one in Wellingborough, 126. This is going to look really good. I think I spent 25k, so I was only in for 151, and that property today, I mean, have a look on Rightmove, Wellingborough, 3-bedroom houses. It's about 200k. I think the revaluation a year ago came in at 175. Today it's 200k. It's definitely around that figure. So the market has really helped my portfolio out. Can it continue though? I mean, quarterly, 3.4%, annual, 8.2%. Surely this can't continue forever, right? Well, if you look at inflation at the moment, we're targeting about 5% inflation in Q1 next year, which is a big number. Tesco's staff have just turned down and said they're going to strike over a 4% pay deal. Now, I'm no economist, and I really am no economist. And I understand there's lots and lots of armchair economists. But I think the Bank of England are in a really sticky position. They can't really tighten interest rates and remove money from the economy without affecting the people they're trying to protect. I think it's a really, really difficult problem at the moment. I think we have to wait for this inflation to come down a little bit, and I think it will over time. I'll be honest, I think that most of the inflation is supply side. If you look at oil prices, it's because there's not enough supply. If you look at gas prices, it's because there's not enough supply. Haulage costs, supply. Taxi costs, an industry that I'm in, is all about supply. And once we get that supply side sorted, which we will, and certainly in my business we will, over a period of time, that's going to bring inflation down and it's going to control it. So I think a lot of this is transitory. I think these sort of numbers are probably sustainable for the next year or two. I think money is so cheap at the moment. What are we paying? Personal residential mortgages at 1%, buy-to-lets at 1.5%. I mean, the money is so cheap. You borrow money today, you actually save based on inflation. You borrow and pay back less than you borrowed. I mean, it's just crazy times. But I do think that this sort of pricing anomaly just allows people who are willing to take this sort of risk most of the benefits, you know, because ultimately inflation feeds through to property prices over the long run anyway. So what's my plan? What am I going to do based with this information? Well, I'm going to continue doing what I was doing, which is basically buying more houses. Every single year I plan on adding around about £500,000 worth of property to my portfolio. I don't see that changing. I've got a long-term plan, dollar cost averaging, both with my index funds and with my property, and I know it's boring to say this, but I'm not going to change my plan. All of this stuff could be transitory, it could be here to stay. I don't know that. You don't know that. So ultimately, all we can do is have a plan, and it's proven that just by sticking to a plan, those people generally over time become wealthy. So guys, let me know down in the comments your thoughts on this report. Ultimately, we're up again. We've been up every single month. All the time I'm talking about this, I'm just like, property prices up, up, up. It seems like it's a one-way street, and believe me, it's not always a one-way street, but ultimately, I believe this time we might continue going up in the next one as well. So guys, I'll see you on the next video. Thank you so much for watching. Like and subscribe. See you soon. Bye-bye.